welcome to today's video. Today I'm going to be discussing and going over my top 3 confluences and necessities that I must see to enter in a trade. Now I do trade supply and demand on the 5-minute chart. However, what I will be discussing on can be adjusted to your liking and will work on majority of strategies. Now, very quickly, this is not financial advice, and please do your own research before applying any of the things in this video. And lastly, this is not a strategy breakdown video. This is simply just the confluences that I use in conjunction with supply and demand. So without wasting any more time, let's get straight to the first confluence. Now, the first confluence that I do need to see when entering a trade or even marking up a zone is a fair value gap. Now, I wouldn't even say this is a confluence anymore for me. This is simply just a necessity, because if this is not present, I would not even bother marking up a zone without it. So as you can see here, this most previous move did create a break of structure, giving us a potential supply zone. So if we do now go to the last bullish candle and mark up that candle, just like this, you can see that we do have a valid fair value gap. Now, this is something that I did touch on in my previous video, so if you didn't watch that, very briefly, a fair value gap is simply an area in the market that is not yet filled in by price action. So as you can see, from the bottom of this bullish candle to the high of the most previous wick, we have an area just like this that is not filled in by price action, which will eventually need to be balanced out. So because we do have a break of structure with a gap above the zone, this is now a valid supply zone for me. So now, as you can see, price does fill in that gap, and we do push down to the downside fairly strongly. Now, this is another example on gold. And one of the difficult things with trading supply and demand is the abundance of setups. Now, as you can see, we are in a valid uptrend. So if we were looking for demand zones, we could potentially take this one. We have another one here, as well as this one at the very bottom. And just like that, we have 3 demand zones, making it difficult for traders to navigate and choose the correct one. However, out of all 3 of the zones, there is only one with a valid fair value gap, and that is this middle zone here. So if we zoom in to the actual zone, as you can see, from this bottom wick here to the height of this top wick here, we do have a little area which will need to be filled in. And once again, when price does come to the zone, you can see that we do have good reaction, giving us the win and the rejection that we want. Now, the second thing that I need to see when entering in a trade is a rejection at the zone. Now, when I first was learning supply and demand, I would take trades where candles would close in zones. However, at about the 2 to 2.5 year mark, I did make the switch over after countless hours of back testing as well as forward testing, and this little change did see my win rate and risk to reward increase significantly. Now, this could be due to the fact that I was simply taking less trades. However, I would strongly recommend backtesting this confluence, especially, and to see if it does make a difference. So I'll run through some examples of just to show you what I look out for specifically. So here we are in a downtrend, and we do have a valid supply zone with a fair value gap as well. So right off the bat, this is a valid zone. However, now we just need to wait for price to reach the zone if it does, and if it does have a rejection. So when price does get to the zone, as you can see, we do have a fairly large rejection. Now, I know a lot of traders would stray away from this because they would want to get entry closer to the zone to avoid having a larger stop loss. Now, obviously, you don't want a massive stop loss because you do want to be able to get a large risk to reward. However, a candle like this wouldn't necessarily affect my bias, because something like this would just show me that there is very strong momentum and a lot of sellers in the market. So I would be completely fine taking a trade just like this with my stop loss above the candle. As you can see, it is very easy for price to reach our first TP. Now, this is the second example on gold once again. Here we do have a valid supply zone. We do have a fairly large fair value gap and a very strong push to the downside. So all of that is following my rules. So then we do wait for price to reach the zone. And as you can see, we do have a few rejections. Now, even though there are multiple rejections, as long as none of the candles actually close within the zone, it is still a valid setup. So as you can see, we did have 1, 2, 3, and 4 candles all rejecting at the zone. However, none of them actually closed within the zone. So I would still be confident to take a trade like this with my entry and then my stop loss above the wicks. And then once again, because we didn't close in the zone, it is fairly easy as well as fairly fast to continue with that momentum to reach our TP. Now, the last confluence that I need to see when entering into trade is being in line and the trade making sense on the higher time frame. Now, this can either mean being on the same trend as the higher time frame, or simply just having zones or seeing a certain rejection on the high time frame for it to make sense to take on the 5 minute. Now, because I do trade on the 5 minute and take all my entries off the 5 minute, my primary higher time frame is going to be the 1 hour chart. Now, this is obviously going to be different for you. If you are trading on the 15 minute, you may tend to look at more the 4 hour or even the daily chart. But for me, it is going to be the 1 hour. So right now we are on GJ on the 5 minute chart. And as you can see, it does look like we are in some sort of uptrend. Now, yes, we have broken some swing lows just like this. However, this fairly large push does indicate some sort of upwards momentum. However, if we were to go on the 1 hour chart now, as you can see, the story is a little different. Now, not only are we coming from a downtrend, however, we are also in a 1 hour supply zone, just like this. Now, not only are we in a 1 hour supply, but we've also given a wick rejection as well as broken the previous candle. So with this different perspective, let's jump back on the 5 minute chart now. And instead of looking for buys, instead we are going to be looking for sells. And the reason being is that it doesn't make sense if we are rejecting off a supply zone on the 1 hour to be going against that and looking for buys. Now, that doesn't necessarily mean that we want to force a sell setup. However, if one does present itself, I am going to be more biased taking that. So looking at this chart, we do have a 5 minute supply zone just like this. Now, it doesn't have the biggest break of structure. However, we do have a push down as well as a fair value gap. So zooming in to now see if we do give a wick rejection entry, and we do just like this. So now placing my entry as well as my stop loss above the previous wicks. Let us now see if the higher time frame does allow us to get this win. So looking at price, as you can see, price does reject very, very nicely, and we are able to reach our TP. Now, once again, as I said in my very first video, just because we are in a downtrend or an uptrend on the high time frame doesn't mean that we can't catch smaller moves in the opposite direction on the lower time frames. However, if you are going after that consistency as well as bigger risk to rewards, which I recommend everyone to do so, you do want to be in line, or at least your trade making sense with the higher time frame. Now, this is going to take some getting used to, and you also do need to be more patient with trades and not just taking everything that does pop up. Marking up your zones correctly and identifying key areas on the higher time frame is going to allow you to not only place more accurate entries, as well as avoid being faked out a lot less. So that is going to be all for today. Thank you guys so much for watching. Hopefully you guys were able to take away something from this video. Now, as I said before, this isn't a strategy breakdown video. However, you can utilize these concepts with a working strategy, not only with supply and demand, but with the majority of strategies out there. So if you guys do decide to start implementing something from this video, I do recommend back testing as well as forward testing. So make sure to leave a comment as well if anything in this video did help you out, as well as to like, share and subscribe. And if you guys do have any future video recommendations, make sure to leave that down below as well. I'll get back to you as soon as possible. So once again, thank you guys so much for watching, and I will see you in the next one.